Alrighty, guys. So today we're going to talk about what is a dilution war for a stock. So first, AMC was the last successful dilution war. Since then, there's been no others. You could argue BBIG was a successful dilution war, but they only diluted less than half of their ammo, and then they let it squeeze from $3 to $12, and enough people cashed out they never had to worry about it again, and they didn't have to dilute again. And so basically what happens is every stock is like they enter the market, and it's called an IPO, an initial public offering. After the IPO, they announce their starting stock price, and people will buy or sell that stock price. Now, there's also, every broker has access to what's called a liquidity pool, and a certain number of shares are placed in this liquidity pool, and they use these shares to fill the order book when retail is buying or selling, and they basically minimize the effects of the retail buying power. People say it's because of PFOF, purchase flow, order flow, and purchase for order flow. And basically, like, a lot of big rich companies trade your stocks for fractions of a penny, extremely fast and in bulk, and they make all these little tiny fractions of a penny every time you trade, and they use that liquidity pool to control your stocks. And so basically, if you wanted to like set up a short squeeze indicator for the entire stock market, what you'd do is you'd set up a scanner that reads all 10,000 stocks and reads every SEC filing, and the only goal is to see, has the outstanding number of shares increased? If the answer is yes, and it's the first one to say yes when there's been, let's say, 6 months, 7-8 months of no dilution, not one company having increased outstanding number of shares, well, when that one pops off, you're going to see a lot of stuff happen. And so, for example, in this story, Mullen is the first one to have a dilution on its stock. And we got the announcement March 14th, and it happened from February 14th to March 14th. And it went from 20 million shares to 150 million shares. Now, if you had that same scanner for the rest of the stock market, like I said, you wouldn't have seen any dilution announcements until you get all the way back to mid-2021, when AMC had its last dilution announcement, which was after the squeeze. They announced that they sold 50 million during the squeeze. But before that, AMC was the last stock to dilute. AMC had 4 dilution announcements in 2021, 6 if you count 2020. And basically, it's just retail buying a bunch of shares, and they don't sell. And even if it goes from $2 to $5, they don't sell because they know it's worth more than $5. When they bought AMC at a 40 million market cap, and it goes to $5, and now it's sitting at 100 million market cap, they're like, nah, this is a $10 billion market cap company. This company does $2 billion in revenue every year. So they don't let retail just get easy money. Like, there's no term that investors and market makers and hedge funds hate more than hearing somebody claim that there's easy money in the stock market. Well, that's what people say, and that's why AMC started. And so what happens is, because people are saying this, because retail's actually buying it, you're going to start seeing a ton of FUD everywhere about why AMC was a bad company. And if you paid attention to AMC, like, the scale to which we had to fight off the people saying AMC was going to a penny was unbelievable. Every single major institution, news network was saying it. and it was intense. And so you're going to get a lot of stock price fluctuations. You're going to hear a lot of different things about it. And you're going to see a lot of other stocks run. And that's the biggest thing. So AMC didn't have a lot of stocks run before it squoze. But that's because AMC squoze in January. And then when it went to it went from literally $3 to $20 down to $5 all in a month. And then the dilution announcement came out a month later that retail bought more and didn't sell what they had at 20. Or the ones that did sell at 20 got replaced by enough buyers plus more to then buy more dilution. And so when GME ran, there was dozens of other stocks that ran hundreds of percent, if not thousands of percent. And even before GME ran, when AMC also ran, there was lots of stocks skyrocketing, Bitcoin skyrocketing, all these different things happening, trying to stop retail buying power to go into a certain stock. And so GME went from $3 all the way to $20 from 2020 to early 2021. $3 to $20 held strong. It actually went to $40, but 20 was the bottom from this little chain before they squoze to $480. And so, like, if we take what we learned from AMC and GME, first off, GME was a squeeze without dilution. AMC was a squeeze that squoze with it and was already in the process, halfway finished of its dilution war. Basically, all the number of shares when the company IPOs, they set a certain number of authorized shares. They set a certain number of issued shares, how many shares they give to themselves, how many shares they put on the market, and then the authorized shares, the difference of what they don't put out there, and the total amount that they can dilute into the future before there's no more shares to dilute. And if there's no more shares to dilute, a stock price will run up until people sell it. And then that's all the shares that they're going to dump into the Russell 2000. There's going to be over 200 to 300 million shares of people that sold Mullen after we squeeze. So if we take what we learned from AMC and GME and we look at Mullen was the first dilution announcement of 2022. No other company had announced dilution in the 8 months previous, besides BBIG. And what have we seen since that first dilution announcement? First off, they started, like, if you go back to when AMC squoze, the only thing that really squeezed after that was Tesla. Tesla squoze January 2022. But after Tesla squoze, there was dead silence. And before Tesla squoze, dead silence in the stock market. Nobody was, like, hyped about anything. Everything was quiet. Market was dragging. And then Mullen, during this dilution phase that they announced later, went from 52 cents low to $1.95 high in the matter of 3 trading days. It was actually mostly 2 trading days. And then from $1.95, they halted it down to $1. They diluted it down to $1. And from there, it dropped from $1 to 77 cents, all the way to $4.18. Another dilution announcement. Crashes us down all the way to, what was it? Well, we crashed down to $2 and then traded up to $3 and down to $2 and up to $3 and down to $2 for like a whole month. And then it crashed down all the way back down, almost to our low that we hit from $1 to 72 cents before we went to the 418. We fell to 78 cents. And then what happens? We squeezed to $1.70 down to 90 cents up to $1.40, down to 90 cents, another dilution announcement. And then you basically got like 2 more cycles of those, and you get to where we are today. Mullen having, I believe it's 6 dilution announcements in the span of 5 months. And the last announcement, the most up-to-date announcement that we've seen, was June 30th, where retail owned 442 million shares of 477 million shares outstanding. Basically showing that we own 95% of the company. Now they have anywhere from 23 million shares to, what would it be, plus 58 million shares of the insider holdings preferred shares. So that'd be 78 million shares that they can further announce until it's a total of 558 million shares diluted. But that would mean every CEO and every insider sold every share that they have. I don't see that happening. And we know that announcement for that all those shares have been diluted, it's not going to come until after we've already started squeezing. Like, because Mullen market cap is 10 times smaller than the $6 billion market cap AMC was when it started its squeeze. Right now, we're less than 600 million market cap. And right now, we own every share. And right now, we're about to squeeze. Like, the limit to what Mullen can do right now, it's never been seen before. And it's the best possible scenario you could possibly imagine within the structure that the stock market is. If you go look at all the companies, you don't get a company that starts cheaper than this. You don't get a company that fully dilutes cheaper than this. They all start with 500 million shares. It's just like the standard throughout the market. And so, because we bought them all, and because they've paid off so many traders to trade all the pump and dumps, whether it's GME and AMC fake hype, NFT garbage, whether it was Adam Aaron with AMC always tweeting this obscene things, like, man, that guy needs to go to jail. Trying to get people to buy AMC and convince them that the squeeze is still in play and that he's going to do something to the shorts. That is the worst thing a CEO can do when he doesn't mean it. If you look at all the crap that Ryan Cohen has tweeted to pump his GME and the fake stock market pumps that come with his tweets before huge crashes just continue to come back, like, they're collecting money on expired options. So a lot of people are betting on call options where they bet on a certain amount of time it's going to move a certain amount of price, and they get paid way more if they hit it right. And if you look at, like, AMC CEO buying into the gold mine, HYMC. So that's another thing. After the first dilution announcement happens, you know it's retail, you know it's real, you know that, like, they're not leaving until they get their freaking squeeze. When you see these other companies come out like HYMC and they further dilute the stock. So basically saying Mullen came out with 150 million purchased shares on March 14th. 2 weeks later, HYMC diluted 100 million shares to retail for like $125 million. Because he announced that he came in from the CEO of AMC, used AMC funds to buy into this gold mine. Well, what does that mean? That means he stole 125 million potential retail buying power to the true and only squeeze that they're trying to distract from. It wasn't just HYMC. There's been so many stocks. ATER was another one that they used Reddit to basically, like, ATER was the biggest Reddit squeeze of 2022. Nothing got more likes, nothing got more upvotes. My Mullen DD for like 2 months got really good up likes and interactions and impressions, but then, like, there was just a lot of banning and blocking from pages, and then eventually the whole Reddit blocked me. But since Mullen happened, they've taken with probably 12 to 20 different pump and dumps that Twitter just acts like is the new Mullen or new AMC or new GME, whether it's Red Box. The new ones are XELA or XLEA. I'm not sure. It's a crappy little EV company that absolutely no retail has ever bought before, and they have 500 million shares to dilute to you, so you can go start a brand new war if you don't want to finish the one that we already started. Pretty lame of you. I don't know who would do that. Like, you just got to be dumb. There's so many that they did this with, though, and that's the sign that they are afraid. And now supposedly Blockbuster's trying to make a comeback. Like, Redbox was a big enough joke, but now supposedly that like Blockbuster's still on the OTC, I guess, and they made an NFT about it. That's what tells me the dilution vote that we have. Like, it all boils down to this. On Tuesday, we're going to hear dilution or no dilution. We could, like, if it's like I say it is, and they already know that there's no dilution, like, it'd make more sense for me that they squeeze on Monday. Don't let people buy more call options because they know it's got to go up. Come up with the dilution announcement, squeeze on Monday, announce you didn't get the dilution vote on Tuesday, and then squeeze for the rest of the week. Probably big crash on Friday to try to get some of their money back on the options. Now, if you assume, like I do, that the dilution vote is coming out a no. Now, why do I say that? First off, I say that because AMC voted no to dilution in April. We only had 400 million shares. And they pulled it off the table because the results were so bad. Like, the vote was supposed to happen end of April. CEO gets on Trades YouTube with 400,000 subscribers and talks to all the AMC investors, answers questions, tries to get you to give him more dilution, even goes so far to say, hey, look back on this day when we diluted, the stock price went up. No, fuck you, bro. That just means it would have gone up more if you didn't dilute. Don't give us this crap. We all went to high school. We all took economics. They taught us about supply and demand. If there is no supply and there's only demand, the price goes up. The mathematics are that simple, people. Don't get that shit twisted. Anyways, if they had the vote, they wouldn't be paying all the fools that are chasing all the swing trades. They wouldn't be pumping all these other stocks. If they had the vote, I just don't think you'd see the people on Twitter hating on the stock. I don't know. I just don't. Everything in my body tells me they don't got the vote. Retail doesn't give up on that. Like, there's a very small number of people that YOLO'd everything they had into this Mullen opportunity. There are 401ks in Mullen right now, just like there were AMC and GME. Very professional people. Very intelligent people. $200,000 to $500,000. Many thousands. Maybe not many thousands. I think there's probably anywhere from 2,000 to 10,000 people that own the entire stock. If you do 10,000 times 50,000, that'd be 500 million. So that means there's got to be at least 10,000 people with $50,000. But it could be 2,000 people with an average of $250,000. Because there's definitely millionaires in Mullen right now, and they've thrown millions. Oh man! But there's a very small number of people that are willing to fight this fight. That's the most surprising thing to me about this dilution war was AMC had 3 different weeks before the squeeze where $500 million came in buying power in those 3 different weeks. Mullen's had 500 million buying power in the last 5 months, and all 6 dilution announcements were roughly 100 to 200 I mean, not even 100. There was probably 70 million to 100 million dilution from buying power. And so it just goes to show that very few people are interested in this squeeze, and that makes you wonder why. And if you ask me, it's because they know the damage that this will do. Like, whether MOAS isn't breaks the whole market, like, if retail holds for forever, the whole definition of the MOAS, mother of all short squeezes, is it can only happen one time and it can only happen on one stock. And it's basically retail looks at the system and says, we don't like it, so we're going to put all of our money into the stock until we own every single share, and we're never going to sell, no matter what the price. And if everyone truly did that, the stock price would never stop going up, and until the rest of the stock market hits zero. Because all the call options that are bought in there have to be force paid from the market makers to you. And the market makers have access to every index, every 401k, every stock on the market. And when we take their money, they got to sell all those positions that they have in every other stock in the market. And it sends them to zero, and it sends us to infinity. I don't think that's what Mullen is. Like, I'm going to swing trade it, and I'm going to buy a bunch of shares at the bottom, and I know that we're going to swing trade from 20 to 50, down to 15, back to 30, down to 20, back to 30. Like, that's definitely happening. And so I'm going to keep buying at the dips, selling at the top, buying at the dips, and we're going to see what happens, because it's going to happen fast. And I'm going to cash out profits as well. And hopefully a lot of people join us, and hopefully we can do something like that. And like, if enough people are watching my YouTube channel, we're probably going to win. But right now, retail is just trying to get paid in a shit world that's taking all their money. Like, retail just wants to fight back. And it's a very small amount of people that are willing to do it, but we're doing it, and we've won. And so, I don't know, I'm just trying to explain what a dilution war is, what you see, what, like, all the things that happen in this event has happened already before, exactly to the T, spread out a little differently, but everything that happened in the last squeeze is before the squeeze has happened now. It's exactly what we want to see, people. And the one thing that we learned for certainty was that retail votes no to dilution. For certainty. Anyone you see saying vote yes for dilution, they don't own any Mullen shares, and they are paid to talk to you people. I promise. And so, I don't know. It doesn't look like they got the dilution vote to me, and I feel good about it. So, the math also says there's no chance they have the dilution vote. So if you're actually worried about it, like, definitely don't be worried about it. This is it, people. There's no way that you can believe that we've bought 450 million shares since June 30th, and that an announcement of no dilution on Tuesday wouldn't send this stock flying. Because all it would take is a maximum of 108 million buying power. And we've already hit that 5 different times. And so, the volume will follow. We will squeeze very, very high, very, very fast. Honestly, because this is the worst possible situation they could have ever put themselves in by fully diluting a stock at $1. It's gonna, like, I just can't see a way where we don't get to $10 in a single day. I think we hit $10 on the first day of the squeeze. So if you see 100%, if we go from $1 to $2 on Monday or Tuesday, like, in that same trading day, we're going to $10. Like, there's just no way they can stop it. And so I think it'll probably go higher than $10. The one way that they might be able to stop it, kind of like what they did with GME, is on February 24th or 25th, 2021 for GME. They crashed it after it went to 480. They crashed it all the way down to $40. And that's when I bought the dip. And I turned $10,000 into $1 million on GME February 25th. And basically, at the end of the day of the 24th, They let it run from $40 to $96, and then they halted it 10 minutes before the stock market crashed, or closed, sorry. And they let it go from the $40 to $96 literally 15 minutes before the close. So they only let it trade for 5 minutes during that crazy volatility. And so, but the following day, it closed another 200%. And so right into the after hours, it went up 150%. And then on the open, it held that and it ran up even further. And then they crashed it down to 100. And then 2 weeks later, it hit $300. And then GME was dead. And it's never been a viable play since. Retail cashed the F out, I promise. But basically, if they let it go up in the last 5 minutes of the market and then they close it early, then of course they could stop it from going up 1,000% in a single day. But if they don't do that, then it's going straight up in the after, or if they do that, it's going straight up in the after hours, and we're going to do that 1,000% within the first 2 days. Who cares? But it's going to happen, people. The math says that once we start the squeeze, the volume that's going to come in from the FOMO is going to be so much greater than the entire market cap of Mullen right now today. And I think the FOMO is going to be bigger than the market cap than what we would be at $10. We're going to see $5 billion of FOMO. Watch, because there's 50,000 people that got this on their watch list, and when it squeezes, they're going to know that it was a squeeze the whole time because they saw everything we saw. They just thought the fucking market makers were going to win. They thought they were going to cheat them out of the squeeze somehow. They thought that, like, they're going to get the dilution on Tuesday, and the squeeze never going to happen. But once they see it go to $2, they're going to know they wouldn't have paid these motherfuckers $2. So once it goes to $2, they're going to know that the squeeze is on, and the amount of buying power that's going to come in is going to be so great. We're going to go up so fast. And if we go up fast enough, like, we may just kickstart into the MOAS. Like, it's totally possible. That would be the most beautiful thing in the world if everyone's just sitting back with their ammo ready, which I think they might be. Because everyone thinks something's going to squeeze. Like, it may not be everyone thinks Mullen's going to squeeze. We definitely have the strongest base. We definitely have the mathematical proof behind us. But the whole internet thinks every other stock is going to be the short squeeze that's going to crush the market makers 2022. The new GameStop is what they call it. And it is 100% for certainty, for fact, that Mullen is the only thing that can be compared to the new GameStop. And it's in a way better mathematical position than GameStop ever was. So I'm feeling pretty good about all of it. What else, people? Dilution war. That's what this talk is about. Yeah. It just boils down until one stock hits full maxed out dilution first. And after, like, if you go look at all the pump and dumps in the last 5 months, like HYMC, like AMC, like GME, like ATER, if they had a dilution announcement, they never had another one. Mullen's the only one with repeat back-to-back 6 times in a row dilution announcements. Say something, motherfucker. Your stock sucks. That's all I got for you people.